Hey, it's Clay Trader, and this will be a video chart on ERHE, ERHC Energy Incorporated. Long time follower of the chart, done quite a few videos on it, and I've been getting some requests on it for an update, and there hasn't been one in a while, so I figured, hey, why not? This will be more of a longer term view on it, just because I think the chart will make more sense in terms of what I'm pointing out. But just start off, and I don't mean to state the obvious, but clearly short to medium term, depending on what your definition is, the trend is down, the chart is bearish, and that's kind of where we stand right now. But like I said, I want to do a little bit broader term view of it, and that way hopefully it'll make more sense, because the overall trend is still bullish. And before you go and call me crazy, kind of what justification do I have to call a chart that's been going down like this still bullish? Well, it's pretty much just simply right there, that orange line, which is the 200-day simple moving average. You can see that it is still very clearly got a nice uptrend to it. So that is what's telling me, and giving me confidence in saying that the overall trend is still up. It is still bullish. Now, medium and short terms, they are bearish, yes. As you can see, the 50-day simple moving average, which is another important moving average, has curled over on us. So this is now pointing down, but right now we still do have the 200-day sloping upwards. Now, as far as this area we're in right now, very important, and this may be the bottom, keyword maybe. If we go here, we can see that back here in June we had a nice gap up. Gap came down, filled, and then the rest was history. Made a nice move up over the next few months. Well, if we draw a line from where that gap occurred at, which is right here, and then we draw where this low was at on the gap day, we kind of have this little zone here that is created. So let me change these to green, because these are support levels. And then hopefully this will make sense as we keep moving forward in the video. So there we have, whoops, I wanted this line to be thicker real quick. So there we have our support zone. So when we zoom back into this area, just remember that I'm grabbing these two lines from the top of the gap and then the low on the next day up where it gapped from. And then also you can see that it's been a proven support level here. When this day came down, this is where it bounced off of. Here it came down, bounced off the top of it. Here it came down and bounced off. And now right now that's where we're sitting. So when we zoom back in, just remember that's where I got those levels. So zooming back in a little bit now, you can see that we have these two, and then we have the 200-day. So what we have here is, I'm making this term up, but maybe like a triple layer support zone, whatever you want to call it. But we basically have three layers of support. We have 1, 2, and then we have a very important one down here, 3, which is the 200-day simple moving average. This is why I'm thinking that this could be the bottom of this long, drawn out pullback here. Is it? I don't know, but I think any chartist would agree that there's a pretty strong case for anybody to say that, hey, this may be the bottom. Now, obviously, if the price goes down and just crashes through all these areas, then the bears really do have a lot of strength. But we'll have to see what happens. But there could be a potential bottom coming up here. And for the traders out there that like the low risk, high reward situations, that is approaching. That is always, of course, assuming that you use your stop losses properly. But overall, chart is nearing this area down here where it may just be time to head back up. Now, let's say it does head back up. Where are the resistance levels that need to be broken on any sort of bounce? Well, the key resistance level that I'm looking at is right around this area right now at 65 cents. Why 65 cents? Well, there's just, if you look back over the history, there's lots of price congestion around this area. We had some highs there. You see the price hung around there. Bounced off from there. Once again, hung around. So it's not an exact level. It's just an area where if you look at the chart, you can see there's these little patches where the price really started to bounce around that area. So that's going to be kind of step one, as I'll call it, in any sort of bounce. You'll want to see this level get broken, but more importantly, you want to see some closes above it. After that, you then have 50-day simple moving average, which will need to be broken again and started to get some closes above. But depending on how long any sort of move up takes, this 50-day may be below this level. So you'll have to kind of play that one by ear. But at the time, for the time being, the 50-day is above this level. So if 65 cents is broken, then your next goal will be to get above the 50-day. I don't want to get too far ahead of ourselves in terms of the resistance levels, because I'll be back to update the chart on any sort of bounces. But just know that the 65-cent area, that's the key place where you want to go and get above on any sort of short-term bounces here in the share price. So once again, nearing some big hefty support areas. So hopefully those will hold. And the overall trend is still up. Even if I extend this out, you can see still way up compared to where it was at the beginning of the year. So still plenty of hope left for the chart, but it is getting to the point where you want to see the bulls really start to shore up their fortresses and step in. If you do have any other questions on the chart, please shoot me a message. I'd also encourage you to check out bullmarketnewsletter.net. If you go there and sign up for the newsletter, you'll be sent a free ebook, which has been getting very good reviews. And with your subscription, you'll get chart setups, trade ideas, educational pieces, everything from penny stocks all the way up to big boards. So it's a win-win. It's free, good variety, so it's worth at least checking out and giving a try. One more time, this was ERHE. Thanks for listening, and have a good weekend.